On to your markets news. Asian stock markets fell for an eighth straight day today. This on the back of a firming dollar amid concerns that the Fed will adopt an even more aggressive monetary policy tone. Market players are eagerly awaiting comments from Fed Chair Jerome Powell later this week at the annual Jackson Hole Symposium. The Nikkei share index closed down 0.5%. The Hang Seng index fell by 1.2%, while over in mainland China, the Shanghai Composite Index dropped more dramatically by 1.8%. Over in the United States, the S&P 500 ended down on Tuesday as investors focused on data showing a slowing economy ahead of a U.S. Fed Reserve gathering later this week at the Jackson Hole. The S&P 500 lost 0.22%, the Nasdaq Composite closed flat, and the Dow Jones Industrial Average fell by 0.47%. All right, let's take a look at the indicators now. The rand is trading at around 17.06 to the dollar, 20.09 against the British pound, and 16.92 against the euro. The JSE is mainly higher at this hour. The oil share index has added 0.3% to range at around 69,959 points. The industrial 25 index is 0.8% firmer. Financials have declined by 0.6%. Markets in Europe are flat at this hour, with Britain's FTSE 100 standing at around 0.4% weaker. The CAC is a tad higher, and the DAX is down by 0.1%. Looking at commodities, gold is trading at around $1,745 an ounce, and platinum at $872 an ounce as well, while the price of Brent crude oil stands at around $101 a barrel. All right, for more and to unpack what's happening on the markets for us, I'm joined by Patrice Rousseau. He's the Chief Investment Officer at Ashburton Investments. A very good afternoon, Patrice. Markets still appear to be in a state of flux. What's driving sentiment?
Good afternoon, Namfu, to you and to your viewers. Yes, very good assessment. I think what's driving sentiment this half day is really the release of inflation numbers from our Reserve Bank at 7.8%, a bit of concerns in the market that we are quite far from the peak of interest rates. So if you recall, the last number was at 7.4%. And, we're still on that upward path, whereas it seems that the US and the rest of the world might have peaked when we look at the inflation pathway there. So that's the main concern. And as you've already related, financials under pressure in our market and the mid-cap sector, which are more interest rate sensitive and linked to the SA economy, under pressure, whereas the mega caps, dual listed shares are showing a bit of a stronger performance today.
Yeah, but why is there this sensitivity among market players, investors, particularly around the Fed? Because the key thing is communication, isn't it? And don't they always really communicate quite clearly what their policy is? But it seems as though exactly a day after they've communicated, everyone's still in doubt about what their policy is. And of course, come, I think, Friday, there's going to be those meetings at the Jackson Hole Symposium where the Fed chair will be speaking. So what's the market anticipating?
I think it's a very good question. I think it's all about the anchor and expectations in terms of inflation. So if you look at South Africa, our Reserve Bank expects inflation to be anchored around 4.5%, between 4 and 5%, and we have core inflation at 4.6%. The Americans, on the other hand, expect inflation to be at 2%, and they've had inflation blowing up way above this level, even higher than the South African inflation number of 7.8%. I think this is the issue. We have the first world who are not used to inflation. Inflation is at 40-year highs, and the war between Ukraine and Russia and disruptions to supply chain is creating a lot of cost push pressures, and they're looking towards the Fed and wondering how much further are they going to hike interest rates in an economy in the US which is already in recession. We've had 2 negative quarters of GDP growth reported. So economy in recession with a Fed which is trying to fight cost push pressures via increasing interest rates and very far from its own target.
Yeah. Now, of course, one of the pieces of advice that people in your profession give is that people who invest should do it for the long haul. But, you know, right now we see a lot of volatility. So if people are trying to play the market right now, you know, what should they be doing? Should they just be folding their hands or taking opportunities at cheaper stocks? What should they be doing?
Yeah, it's a very good point you raise. If you look at global markets, many of the very well-owned stocks, like the Nasdaq, was down by over 15% year to date. And yet, in the last month and a half, we've had the Nasdaq rebound almost 20%, one of the best quarters on record. So the message here is, when you see markets going down, usually is a buying opportunity. And unfortunately, you will have these short-term rallies, but you must stick to a longer-term plan. Similarly, the JSE is only down 4% year to date, despite this very bad backdrop that we're seeing. So you need to really invest when you have the opportunities and think of a longer-term plan. I mean, most of us are saving for our pension, and that's a 30, 40-year plan.
Just looking at today's national shutdown, does that really do anything to the market? How is the rand reacting? Also on the back of the inflation number that you've mentioned, the 7.8% for July.
Yeah, I think that doesn't help sentiment, especially when it comes to investors who want the economy to go back on a better footing. We've had many disruptions, whether it's supply chain, whether the events in KZN, and now national shutdown in an economy which is yearning for jobs really doesn't help. The rand has been on the back foot, but I would say that's more a function of the strong dollar than the rand itself being weaker. You would have seen also the euro being under pressure just due to the strong greenback.
Yeah. And then lastly, we have been talking a lot about monetary policy. What is your expectation around what the Reserve Bank will do at its next meeting, given the fact that it looks as though inflation does continue to rise upwards with no peak in sight?
Yeah, I think the Reserve Bank, surprised the markets by hiking by 75 basis points at its last meeting. I think our options are very limited now that we have headline inflation at 7.8% and core inflation at 4.6%. I think we are quite very likely to see at least a 50 basis point hike in September, with, I would say, a high probability of a 75 basis point hike.
All right, Patrice, thank you very much for your time and your insights there. Patrice Rousseau, he's the Chief Investment Officer at Ashburton Investments. We're going to take a quick break. We'll have more business news for you after that.